again, for our viewers who aren't aware, we've been tracking the silver market with you ever since your call, or a long time before, but ever since your call for when silver was breaking out, above 35 or whatnot, and you saying that silver was going to make a huge move. It did. Now, again, you are calling for $300 to $500 or more in silver coming soon. In your recent report on momentum structural analysis, you mentioned how when silver gets to the $60 level, there's always strong buying there. We have seen in the last couple days silver dip below 64. Has anything with regard to this price action we've seen just today and yesterday changed your overall view at all?
No, we measure the monetary metals in all markets on a long-term momentum trend basis. That doesn't mean looking at a price chart. We measure them versus a 3-year average, 30 and 3/4 average, and we plot an oscillator. We don't just overlay the silly average, because sometimes that doesn't mean anything. But when we plot the chart, a momentum chart, this recent break that we had literally was a 1.5 day phenomenon. January 31st, February 3rd. And gold and silver. Since then, that break did not damage any long-term momentum trend factors, period. Okay. Therefore, we have to define this break, however sharp it was, from a day and a half drop, from 120 phantom high, really, because you were only up there for hours or a few days between 100 and 120, down to 64, okay, February 3rd. And since then, you've gone up and down and up and down. It's been 6 months now, Jan, Feb, March, April, May, June. Okay, we're in this 6 month of selling pressure. And where are we? We're trading where we were on February 3rd, the $64. Now, there was also a run the stops type of low that occurred on March 23rd, where the silver went down and took out that February low and got to 61. It spent like 2 hours down there and immediately went like a vacuum, right back above the 64 low. In other words, we took out the low, ran the stops, nothing there except buying. We got right back up in the 70s and 80s and back up in the range. So again, if you look at it from that perspective, first off, there's no long-term trend damage done to silver or gold in this break. Okay, it was intermediate issue. And intermediate to short-term technicals broke. The issue, therefore, now is healing up those intermediate to short-term metrics to turn them back positive so they're back in line with the long-term technicals. Because, in any market, you could have a major trend and have counter-trend moves where all the intermediate stuff goes negative, but the long-term stuff remains positive or remains negative, whichever the case may be. This break is very old now. We've had 6 months of constant selling pressure, and where are we? We're where we were on February 3rd. Okay, so if the bears think they're winning, okay, fine. They keep a lid on it. But on the other hand, every time they sell it off and it gets under 70 and gets a 60 handle on it, go back and look at the charts. How long does it stay there? Okay, usually hours or days, okay? And then back above. This is their third and last chance. They either make this one work on the downside or it's over. That's our assessment. Maybe MSA is wrong. Maybe we're going to go, like the vast majority of analysts now say, oh gosh, we're going back and basically get on top of the old range, meaning the $50 range. We're going to get back down near there. Okay, do it now or you failed. And we've got numbers not far above the market. We're trading today 64, 65 area. I won't specify the numbers because they can change day to day, week to week, and we provide those to our subscribers. But it won't take much of a rally out of here. You don't even have to go up $10 or anything like that. Just a handful of dollars, and you're going to start to engage a lot of short-term metrics back into positive trend. In which case we argue, okay, 3 times you're out. Okay, you've had your chance. Kill it or don't kill it. And they've tried 3 times, and all we could see when you look at a silly price chart is somebody's down there in the 60s and buys it every time. And the majority now thinks they're wrong and they're going to go lower. Okay, well, we'll see. If not, once we come out of this congestion zone, and we've got numbers that don't require you have to literally go up and take out the price highs that we saw in January or anything like that. We've got numbers that are in the lower half of that price range that tell us that we're going to blow out that range to the upside. And that's when you get the even more dramatic move than what we saw, for example, between, let's say, October and the January high, where silver went from, in the 40s, 50s up to 120. Okay. We'll see something even more dramatic than that. So right now, the bears better do their job and do it like immediately. Otherwise, they're going to lose.
This really does remind me of the time back in, around Thanksgiving of last year when silver was, kept dipping below 50 here and there. And you were saying that, there are big players buying whenever it does. And from there, a lot of analysts at that point as well, were calling for $40 silver or below. And we didn't see silver turn back to those levels. So it really does remind me of that time that we spoke about.
Yeah, most of the congestion zones we've seen in what has been a layered bull market in silver and gold for the last, handful of years, even 11 years since the 2015 low. Anytime we get a range-bound situation and you break out of it, especially in gold, and you surge, everybody always analyzes, quote unquote, that it's got to go back and sit on the old resistance, the old highs of that range, and then turn up again. And it never does that. It builds a range, breaks out of it, but it never seems to go back to the top end of the prior idiot range. And a lot of people are now talking $3,500 gold to get back on top of the prior range. Okay. Well, all I can say is the clock is ticking and 3 strikes and you're out. You better make this one work. You better hit a home run on the downside, because otherwise the bull forces are going to take over and you're going to come out of this congestion zone. And we argue that as you come out of this congestion zone, assuming we're right in this analysis, it will be rapid. It won't take 3 months to get back up to the highs. It might take 3 weeks or something. So the issue right now is bears are in charge. Let's see it. And their clock is ticking.
You mentioned how the majority of analysts right now are calling for that $50 level for silver. If we see that break and the bears do win short term here, does that invalidate your call, or what is your perspective on that? What happens at that point?
No, it just, we would be wrong on our intermediate call here. And the long-term trend is positive. I don't think we're going back to sit on the 50-year range. And again, I probably said this before in chatting with you, is that if you go back and look, let's take 3 other metals, for example. Copper. Copper lived in a multi-decade range between 50 cents and $1.50, and you could just draw a little range-bound situation until late 2005. Copper then nudged up through the top of that range, and within about 3 quarters or so, went up to $4.10. You had a range from 50 to $1.50, let's call it average of $1, multi-decades, confined, broke out, went to $4.10, and did it in quarters. Not a couple years, okay? And after that, lived in a new range that you could probably average at about $3 to $3.50. Of course, now we're trading $6.30, okay? Go to lead. It was confined in a multi-decade range, same as silver, 1970s, 80s, 90s, until 2010. And then lead decided, hey, I'm going to break out of this range. It wasn't in sync with copper. Copper had done it in 2005 and 6. Lead did it in 2007, a year later, and quadrupled in price in a matter of several quarters, which went to a new reality, but didn't take years to get there, and then lived in a new reality at a much higher level. Okay, gold, the mama metal, the mama monetary metal. Silver's the, poor man's gold, okay? Silver always moves with gold, major trend swings, always. But how come when gold kept making new highs, 1980, 2011, 2020, took out the 2011 highs, lived up there. Silver was still capped at 50. Copper wasn't capped. Lead wasn't capped. Gold wasn't capped. How come silver was confined in this little box? Well, there's arguments that, and evidence that it was restrained by certain arbitrary forces from the outside, trying to keep it capped. Well, they failed. And whenever a market makes a mistake, like staying way too high for too long or way too low for too long, when it compensates for it, it often goes berserk, which it doesn't do it in a logical way. It does it in what you think is an irrational way. It just unleashes to correct itself. I think silver's in that process. And I think, if we measure from what we consider to be when the clock began for this multi-quarter surge, let's say, was November's close. That's when silver broke out versus gold, like a 10-year wide range of very low valuations, and broke out of it, and still above it, by the way. Silver's still doing better than gold. It's only, that was November close, so we start December, Jan, Feb, March, April. We're a couple quarters into it. We're arguing that in the next quarter or so, when you come out of this congestion zone, you could see the absolute parabolic move that copper produced, that lead produced, in their move to new reality. And it's up to the bears now. You either prove your case or you fail, and you got to do it like right away, like now. We'll see.